big day. First one of 2024. It was this morning. In 2022 and 2023, Bank of Canada was really aggressive with how they raised their rates. But we are definitely expecting a shift this year and possibly even a decrease. So we're joined here today with Josh. Josh, thanks for joining us. Can you fill us in with what happened today? Bank of Canada rate announcement.
Absolutely, Jay. Well, you know what? As expected, the Bank of Canada today, they kept the rate the same. So there's no difference. But we were expecting that after, lots of increases in 2022 and up to mid 2023. What we were looking for today is actually some commentary. What are the words that the Bank of Canada was going to share with us as they told us the rates staying the same? Because we're really looking forward to when the interest rates are going to start to decrease and kind of trying to tease out a few of the clues from there. So with the rate unchanged, that means people with home equity lines of credit or other lines of credit or variable rate mortgages, their rate doesn't change. But there is some hope that rates will start to decrease here later in the year. And those in variable rate mortgage payments will then start to see some payment relief as well. So yeah, today was really all about looking for the clues from the Bank of Canada.
So did they give us any clues? Like, do we know what's happening? Like, what can we expect,
Jay, they absolutely did give us some clues. The first clue I'll share here on the screen is that the bank has they said that the economy has stalled since the middle of 2023. And, we kind of knew that. We've been talking about that in our other videos that have come out recently. The growth in Canada's economy has come down to almost nothing since midway through the year. They are expecting it to continue to be that way as well until kind of the end of the first quarter of this year. So with that in mind, they say it's because consumers have pulled back their spending in response to not only the higher interest rates, but also in response to higher prices overall. So that tells us that what the bank was doing by increasing the rate has worked largely. We are still seeing inflation a little bit high. It did tick up here later in the year. In December, we saw a little bit of upward movement, but overall, things are slowing down, and the bank seems to be pretty happy with that. The next thing they did say, though, is because something called core inflation, and that's the inflation measure that excludes shelter costs and food costs, or not shelter. It excludes food costs and it excludes energy costs. That one's remained just a little bit stubbornly high, and as a result of that, they do want to see further and sustained easing in that core inflation. That's what we're expecting to see, and that's what the bank wants to see before they start to, like, the unstated part is before they start to decrease their interest rate. So really now what we have to do is take a look at the data for ourselves, take a look and see what the economists are predicting as far as when those rates will be changing.
Okay, so what I'm hearing you say then is the data, and I guess a bunch of economists can tell us what to expect. So what are they telling us? Like, what do they say?
Well, what I'm going to share here is just a little bit of the data, some recent data, including maybe a different way of looking at GDP, which GDP being the primary measure of economic growth, and what the bank was saying when they said economic growth has more or less stalled. That gives us, unfortunately, a picture of overall weakness in Canada. Now, Canada's a big country with diverse economies within. Not all provinces are the same. Here in Alberta, of course, things are still very strong. But if we look, say, across the country, Quebec actually has been in recession for the last 6 or 9 months already. So while we're doing well here in Alberta, we do have to, or the bank has to, pay attention to the country as a whole. Now, if we take a look at, there's a few things on this chart that I want to point out. I'm going to make it go full screen here, so it's a little easier for everybody to see. Retail sales growth. That's a number that talks about how the number of sales in retail is increasing. If we look kind of toward the left side in 2022, we saw a big, huge spike there where it got over 12%. And that was about the same time that inflation hit its peak as well. Inflation immediately started to backtrack as soon as the Bank of Canada started to increase its interest rate. And you'll see on that chart there, that red line going down faster than the orange line, which is the inflation line. Because what happened since then is the components that are making up that inflation have sort of shifted away from prices of things increasing to prices of services, and really shelter costs have been increasing quite dramatically. But take a look at that blue line. That's the GDP growth, but not as a whole, because yes, things are growing in Canada. That is a look of GDP per person, because our population's growing and the actual economic output per person is decreasing. So being at around that -2 mark, it means that while we're not in recession, we're not very far away from it. And that's going to give the bank reason to want to, or even to need to, stimulate the economy here over the coming quarters, I guess we could say. I guess one other thing to share here is that the Desjardins Bank, they've recently shared with us that, let me get that going here for you. Desjardins recently shared with us that much of what's left driving the inflation above where we want it to be, because it's at around that 3.5 mark right now. Much of that is actually from shelter costs, because we know mortgage rates have gone up. So the mortgage interest part, and we know that rent has been going up, a combination of higher mortgage payments for landlords and immigration with housing supply not keeping up. So if we take those two things out, there's not a lot the bank can do about housing supply right now in the immediate, but there is something they can do about the interest rates. So if we take that out, though, inflation's now running at only 2.4%, which is very, very close to that target that the bank wants, and down from that same measure at 6% only a year ago. So we've definitely seen some very good progress there in the data.
Yeah, that's a lot of numbers, Josh.
It's a lot of numbers. It really is.
It's hard for a guy like me to dummy it down for me and tell me, what can we expect? What do the economists say about this data?
Yeah, so what we'll do is we will talk about that for sure. The economists are saying that rates are coming. Reuters recently polled the 34 economists poll, and 65% of them said that we can expect that first rate cut to come in June or maybe a little bit later. That means there's also 30%, 35% that think that it's going to come sooner than that. There's some suggesting as early as April, but I think really June is likely when we're going to see that first 0.25% interest rate drop. And then really the question, once that first one happens, the question really becomes, how quickly are we going to see those interest rates decrease? And how far are we going to see those interest rates decrease? And looking over at Capital Economics, they're a well-known, well-respected economic think tank. And they're telling us that, their forecast, I should say, really is that we're going to see 2% in decreases. They're expecting it 0.25% at a time every 6 weeks until it's done. But I guess we could probably say, if they're right, we're going to see the variable rates and all of the Bank of Canada rate stuff drop by 2%, probably by late spring or summer of 2025. So that will provide a lot of relief to anybody in the variable rates. And of course, we're going to see the fixed rates trend along with that, and likely even in anticipation of that.
Super interesting. So 18 months is kind of the course of time which we should expect these changes to occur. It's going to be very interesting for buyers. We're going to have to wrestle like when we buy and how we buy. And so, we look forward to helping all our buyers with that, of course, for our sellers, another strategy. But so our next big key date to look out for is March 6th. Next rate announcement. It'll be very interesting to see what they do next and how they handle it, and we'll keep our eye on this. We'll continue to do these sort of live announcements as they're coming. Next week, you and I are going to chat about how to renegotiate your mortgage renewal if you have options and maybe some of the things you can do. And then we're also going to share like a pretty exciting strategy we've come up with, because I feel this is one of the best times to buy a brand new home in Alberta. Prices are amazing. I'm excited about kind of what's happening coming up. So we have a strategy for you to share, how you can buy a new home and sell your old home at the same time and make it all flow together and eliminate all this sort of heartache that's associated typically with it. So like and follow our page. Thank you for joining us. We're glad you came. We're happy for the rate announcement this morning. We look forward to seeing you next time.
Thanks, everybody. Take care.
Thank you.